Wall Street's wild swings continued yesterday as the Dow Jones had its largest single-day gain since 2008 after President Trump declared a national emergency due to the coronavirus. Right now, U.S. stock futures are all in green. The Dow jumped nearly 2,000 points Friday, an increase of nearly 9.5%. The S&P 500 rose more than 9%, as did the Nasdaq. Those gains didn't erase all the losses from Thursday's disastrous day on Wall Street when all three indexes closed down nearly 10%. The Dow Jones dropped a record-shattering 2,300 points on Thursday. I know that's a lot to take in. So many investors are concerned and they're wondering, what do we do next? They're concerned about their retirement accounts and just overall in general. So joining me now to talk about this, certified financial planner Titus Pittman. Good morning.
Good morning.
That was a lot of information and kind of overwhelming for most. What are the basics people need to know right now?
Great question. Last 2 weeks has been anything but settling. But it's important for most people to know that we're not in a financial crisis, meaning there's not a run on the banks, credit is not being squeezed, so people shouldn't run out to the banks and make cash withdrawals. I would say it's important to know that this, like any other markets we have, it's a point in time. So the basic things they should know is have some cash aside for those short-term needs. If your employment is disrupted or if you have to make plans for childcare that you wasn't unexpected, make sure those things are shored up. But as it relates to the investment world, I would say continue to just relax, make sure that you're properly allocated and diversified, and this too shall pass.
And when you say cash aside, you don't mean go to the bank, take out all the money in your bank account.
Absolutely. As I said before, unlike 2008, our financial markets are not squeezed and credit is not inefficient. This means that, if you want to make a withdrawal 2 weeks from now, that money will be there. If you want to go to your bank and make a withdrawal from your bank, that money is there. This is a health emergency crisis, which with that is uncertainty. And of course, that causes some volatility in the stock market.
Is this the same situation we saw in 2008?
It is not. As I said before, banks are well capitalized, and there's been a lot of things put in place because of 2008, which allows our markets not to freeze up. What we're trying to do now is make sure that the next 3 to 6 months that the companies are able to continue to be efficient, employers are continuing to provide services and other options for their employees to work so we can reduce the coronavirus and the spread. So these things like what we had with the swine flu, with AIDS, and all these epidemics, the data shows us that over a short period of time, we have this disruption, but then the markets itself is higher over the next 6 to 12 months out.
How much money do you tell people to put aside? I'm sure it's income-based.
Absolutely, and it depends on each person's situation, but it's always important to have at least 1 to 3 months worth of emergency money set aside for the fact of these emergencies. And what this will cause when there's times like this, you're having not to have to sell out your investments at a period when it's down, whether you have those liquidities assets already set aside and made plans for those times.
Is this actually a good time to get into the stock market?
For those longer-term investors, this is a great opportunity. Keep in mind, just 2 weeks ago, these same high-quality companies are now on sale. So if you have a long time horizon, 5, 10 plus years out, this is an opportunity for you to slowly, systematic, dollar-cost average into the market. And we see that over the next 3 to 5 years, that those purchases you make today will depreciate in value over the long term.
Your clients coming to you, what are the biggest concerns and what is the one thing you want to tell people?
I want to tell people that, like any crisis we have, that the first thing we need to do is reassess our own financial situation, making sure, as I said, we have the emergency fund set aside, making sure our investments are properly allocated, and make sure that we have the time and the investments we select match our risk objectives. If you do that, in time, the market would ebb and flow. But however, over time, it's been consistent. The data has shown us we come out on this a lot better on the other side once the time period has arrived.
A lot of useful information. Thank you so much for joining us this morning.
Thanks for having me.
We appreciate it. All right, we're going to continue to keep you updated on the latest news related to the coronavirus. You can just head to our website, news4jax.com/coronavirus.